Yo, what's up, y'all? This Feel Good with Feel Good Investing. And today I'm going to talk to you about my $30,000 stock mistake. I'm going to try not to make this long because it's a long story behind the madness. Excuse me. It's a long story behind the madness, but I'm trying to give you the simplified version. But before I do that, please like, comment, and subscribe. Help out my channel. I'm new to this. If you got any pointers, tips, leave it in the comment section. I got thick skin. I'm open to criticism. But yeah, just hear me out. So I lost $30,000 in the stock market this past year by listening to unqualified people. I lost $30,000 in the stock market by not following my intuition, my own good feeling. I started out with Tesla. Tesla was my first major stock investment. I took $8,000 out of my 401k that I cashed out from my job, and I put $8,000 into Tesla. I did that before the stock split last year, so I got in at Tesla in June when it was like about $400 or $500. Once I heard of the stock split, I put more money into Tesla, and then I ended up with like about 5-6 shares of Tesla, and ended up after the split with 27 different shares. I forgot the exact number, but it was somewhere around there. But along my stock journey, I was also learning about real estate and real estate investing. So I went to a little real estate seminar here in Atlanta. It was trash. I really didn't get nothing from it. And just a word to the wise, all of those real estate moguls that have these free seminars at these hotels and conference centers, do not go. Well, go for the free information, but do not give them a dime of your money. Please don't. But like a fool, I did. I paid $1,000 for a little 3-day workshop, and in that workshop, they had a guest come by and talk to us about option trading. And I saw the word options on TD Ameritrade a lot, and I never knew what options were. So I ended up paying another $200 just for the option class. And the option class was, way more informational, were informative and more, attractive than the real estate class that I was going to, or the workshop I was attending. So I gained more from the option side than I did real estate. And just to take that to how I grew my account, I grew my stock account with options. I only had a few stocks that I was invested in, a few equity stocks I was invested in. The majority of my proceeds came from options. So I turned basically, after Tesla ran up after the split, I 8,000 turned into like 17,000. I doubled my money, took profits, bought options. Just say at the end of the day, the amount of money that I made off the options were where I grew my account to like about 40,000, 50,000 just with stocks and options. So here comes along the Wall Street bet community. I'm on Reddit trying to get familiar with, the Wall Street group and the whole YOLO thing. And yes, I bought into the GameStop stock. I bought in around 190, rolled it up to 400, and I forgot how many shares I had at the time, but my account was like about 40 to 45,000 before I invested in GameStop. And at the peak of the little meme stock wave or whatnot, little meme stock trend, my WeBull account was $69,000, and I did not cash out on it. Me getting too high on my horse, me being too blissful at the moment, not knowing the cycles and the volatility of the stock market, I should have cashed out then, especially when I just started out with $8,000. So number one, do not be greedy. I even have a Facebook group where my motto is pocket the profit. And I did the exact opposite. I was hoping and wishing, hoping that that 69,000 turned to 75 to 85 on, and on, so on. But my goal was to hit 100,000 and go ahead and get out. But clearly I stopped short. So in February of this year, um, yeah, when the market tanked, so did my WeBull account. My WeBull account slowly shrunk from 69,000 all the way down to 30,000. So that's really over 30,000 dollars. But I sold some shares, took some profits along the way down. But um, what the biggest thing that caused that 30,000 drop was my options position. I had like my overall account was like about 40 positions. 5 or 6 of them was like, normal stocks, and the rest was just strictly options. Do not do that when investing. Keep all of your open positions beneath, especially if you knew, beneath 10 or 15. I say 10, especially if you knew. But I got in at a good time where stock market was doing abnormal things, and it was a major bull market. Excuse me, I'm drinking beer, by the way. You did. So yeah, I got in at a good time, but me being so new, not knowing the cycles of the stock market, not knowing the different charts and indexes that actually influence the stock market, I had no idea of these things. So I just want to give a quick bullet point, a couple of bullet points on what to look for and what not to look for when you're investing in stocks. So no matter what a company is going through, no matter what type of good news they have, no matter basically no matter how much cash flow they have available, the economy indexes kind of affects the behavior of the stock market. What I mean about economy indexes, I'm talking about the consumer price index. If the CPI is going up, the stocks are going to go down. That means basically what I'm saying is the consumer price index, when they go up, that means the stuff that you pay for on an everyday basis are getting more expensive. So like, how gas once upon a time was like 80-90 cents, then it started going up to $1, then $2. Now it's at $3 or $4 in the South. So a carton of eggs just 3 months ago was like 60, 80 something cents. Now it's done double. So the consumer price index is responsible for the increases of the price on the things that we pay for on a daily basis. So you got to look at that. You got to look at the U.S. Treasury, bond chart to see if the Treasury notes interest are going up. If I said that right, so the interest rate on the Treasury bonds, if that start to increase, then the stocks would decrease. Why? Because people want to make safer bets. People want to make safer investment, and the market is moved by institutions, aka smart money, not everyday people like me and you. So these companies can afford to take out their money when a slow investment like a bond increases its interest rate, because the people that work for those companies will either leave, get fired, or unfortunately die, but the company will remain for the most part. So smart money have the ability to make the stocks go up and down when they buy or sell different stocks. So when they see that the Treasury are offering better interest rate, then they rather go make that money instead of betting it on a high risk investment, like a lot of these electric vehicle companies. Shout out to Tesla though, because Tesla here to stay. You hear? But anyway, so yeah, that's just how I go. What they call it, the VIX. There's an index called the VIX that basically measures the volatility of the market. If it increases, that means more volatility. More people are you know, more people are expecting losses, or it's just a lot of trading activity. Um, if it's more flat or decreasing, it's hard to make money in a market like that. So you kind of want volatility, because wherever it's high volatility, it's some money to be made. But you got to know how to play, because you can be the one getting dumped on if you following a stock that's getting pumped. You know, pump the stock, don't get dumped from this stock. So yeah, um, two, just get a feel for what's going on in the market, man. Um, if you hear anything about supply and demand and the supply chain having issues, or man, you just got to be in tune with what's going on a national level, because that can have an effect on your positions. Now, if you're the type of investor that's just putting in money today and you don't care about what the stock do, and you just want to cash out 5, 10 years from there, then you don't have to worry about none of this. You just need to know how to read a chart and plan your initial investment. But for the people who actually want to like day trade or cash out on stocks, a couple of weeks from after they invest, and then yes, it's a lot of things that you need to look out for that's outside, of company news and fundamentals. So get familiar with these economy indexes. Go to tradingview.com. They got a lot of them. They got every chart known to man on there just for about. They don't have safe mode for the cryptocurrency, but I'm pretty sure they're adding that. But for the most part, they have all the charts for every sector, industry available. So outside of the economic charts and how it affects the stock market, you need to know the earnings date. See, a lot of stocks go up right before the earnings, and then if a company did good, made profit for that quarter, then to the common people that's good news. So you expect the stock to go even further, to increase even further. But what I learned, that's not the case. After a good earnings report, a lot of people sell. A lot of people sell, and the people that sell is probably the people that's been holding for the past 2 or 3 quarters or some years. So they just want to, collect and pocket their profit, get out, cause the chart to go down, put fear into the common people like me and you. So we end up selling, and then they hop back in. That's what I learned. So you wanna play stocks based on their earnings date. Invest in stocks afterwards. You'll probably get it at a discount. And also, what I would like to add is, I think my biggest mistake was listening to a lot of YouTubers. No one is a financial advisor for the most part. Um, I was big on this diamond handing, and whatever goes down gonna go back up and all that good stuff. But when it comes to options, that's not the case. Options have expiration, and it's hard to bounce back on an option that you bought high and it decreased. So it's not like a stock. You can hold a stock forever until you sell. But options, yeah, you got a time limit on when you're supposed to, give up that contract or buy or sell that contract, depending on how you plan it. So if I can say that, like, what was the major thing on why I lost $30,000, it was because of me listening to people that was unqualified. I saw my money. I should have took my money. I let other people take my money, trying to be a disciplined investor. So at the end of the day, you have to develop a plan that suits you. Only you know your finances. Only you know what you're capable of pulling in on a weekly, monthly type of basis. You know you best. So it's always good to, hear other people's stories, or, people give advice, I believe, with the good intentions of their heart. But just because that person have good intention doesn't mean it's in your best interest. So separate the two. Um, so if I can go back and do it again, I would reduce. Oh yeah, I forgot to say, like, yeah, my WeBull account, I had like over 50 different positions open, 10 stocks, 40 options. That's a big no-no. I was way too heavy on the option side, way too heavy. So yeah, if you're gonna play with options, play smart, play safe. They got different strategies and methods that you can use to minimize risk that I knew about, but I wasn't interested in because the stock market at that time was so bullish. So I was just buying calls, buy a call, buy a call, buy a call. But yeah, if I'm if you're not into options, maybe I'm speaking over your head right now. But for those out there that do know options, buying a call is the most riskiest option play available because you really better have a strong conviction on the stock going up past the strike price at a certain date. So yeah, just like I said, man, follow your intuitions, uh develop a strategy, don't chase the hype, and just focus and learn. You can learn every day. Learn a little something about stocks, learn how to read charts, and learn these other economic charts that's available too. Like, you know, how many jobs or unemployment rate, all that good little stuff. That plays a factor on your money. And if you can manage all of that, I know it probably sounds a lot, but if you can manage to do at least half of what I said, you'll be in a good position, and you can save yourself $30,000, unlike I did in the stock market. And I'm gonna end it. I'm gonna end it with that. Y'all be safe. Please don't forget to like and comment and subscribe. Feel good. Check out my future videos. Links in the description at the bottom. Check them out. Subscribe to Kitchen Goddess TV. She doing her thing on the chef side of the game. So yeah, other than that, I will see y'all next time. Peace.